We're joined by now Mr. Miswin Mahesh. He's an independent oil analyst. Miswin, thanks so much for joining in on ET Now. How would you read into the news coming in first up from the OPEC and non-OPEC coalition? Let's talk about that first. They have, if I have to talk about the compliance, 89%, not a bad number at all. But do you think it's mostly being led by Saudi and, the rest are just more or less banking on Saudi actually proving to be more than adherent to the requirement?
Yes, absolutely. I was actually going to add that the Saudis have done most of the heavy lifting. In fact, they've even gone beyond what they had agreed, because in December they had agreed only to bring their production down from just above 11 to 10.2 million barrels per day, and now they've brought it down below 10 million barrels per day, 9.8. What this does show is two things. One, the kingdom really wants to defend $65 a barrel and wants to change that goalpost to 70. And the second thing, as you just mentioned, is the kingdom is going on its own to do most of the heavy lifting, even if other producers aren't doing much. And I think that's quite vital to know at this stage.
As we stand right now, as things are looking right now with this 90% compliance, how would you look at the entire demand supply situation? Because, okay, the supply side will be controlled by the coal, by the cartel. But I think the demand side right now is where questions are being raised, because across the globe, right, from China to Europe to even IMF, Fitch, all of them have cut their growth outlooks, for 2019 and 2020. Would you believe then, in light of that and in light of the fears of demand dwindling, that we still may be in that bit of an oversupply situation?
So here's the thing. In terms of macroeconomic data, you're absolutely right. Things have worsened. But what's been very surprising is that oil demand so far has held pretty strongly. If you look at India's demand data that came out just a few days ago as well, pretty strong numbers coming out. China as well, despite all the doom and gloom on the macroeconomic side, demand data still held strong. And I think that's quite impressive for a few reasons. One, it's a reflection of the low oil price that we had in Q4. So you tend to get that lag in terms of demand. And the second thing I'd say is the stimulus, and you briefly mentioned this earlier in your show, from the Fed that has now sort of reduced all its interest, being basically very, very dovish, to the ECB as well as to the bank, the People's Bank of China. Almost every government and Federal Reserve Bank has been on an easing monetary policy. So that's helped on the demand side thus far. I have to say, though, I think come the second half of the year, that would be a major concern if the stimulus doesn't really help.
So
but
what do
now,
you think?
things are okay.
So what do you think the cartel would do then in their June meeting? I mean, I know it's still 3 months away, but what's the consensus, on the street?
Yeah, so consensus is very much that they agree to extend it. And the reason that consensus is sort of coming from is the fact that the Saudis have been proactively reducing a lot more than what they had expected. Now, I would counter that and say June is going to be a very tricky meeting, because June is the time when U.S. supply gets into the market very strongly, because their pipeline bottlenecks ease around that time, June, July. So you're having to deal with an extra 500,000 barrels per day, if not 800,000 barrels per day more of shale. You also have to deal with Venezuela and Iran. Currently, both of them have been declining, but there is a possibility we might see things bottoming out there as well. So it will be a huge challenge, in my view, and I wouldn't be surprised if there is a risk that they don't extend. And the third thing is Russia is not that keen to extend as well.
All right. I'm going to talk now from the, I'm going to shift the equation now to the Americas. I'm going to talk about Venezuela and the US. I think first I'll talk about Venezuela. I think last week was the first time that the United States actually did not import any oil from Venezuela at all. Do you think the oil markets have taken complete cognizance of the Venezuelan part of the equation? Because I think many do say that still the oil prices are not reflecting the fact that Venezuelan oil imports could dwindle down to close to zero.
Yeah, so I'd say absolutely the market's priced it in. And the way to look at this is if you look at the difference between the Brent crude grade as well as the Dubai crude grade, because Dubai is a sour, medium sour crude grade, which is what Venezuela produces, you'll notice that Dubai now is, the Dubai crude grade is trading at a premium to Brent. Typically, it trades at a $2.50 discount. This has happened for the first time since 2009, and it is a sign that the market's clearly short of those heavy, medium Venezuelan barrels, which are the same as the Canadian and the Iranian barrels that are being lost as well. So, absolutely, the market's factoring it in. The only caveat I'd add here is the new development that the U.S. has asked India to reduce its Venezuelan imports, and India has responded by saying they will reduce it if they get a waiver on Iran. So I think that dynamic is quite interesting to look at.
All right, Miswin, it was an absolute pleasure chatting with you. Thanks so much for joining in on ET Now, and I hope you have a lovely weekend.